Yes, good morning, good afternoon, or perhaps good evening, regarding where you are present. Welcome to this webinar on climate finance, particularly on Paris alignment that we will be discussing today. Welcome again, wherever you are from currently. I am based in the Netherlands. My name is Ingmar Schuurmans, and I will be together with Mikko Halonen, your moderator for today. So what will we be doing? Well, this webinar is a constituency, a group, a platform of different Nordic investors and sustainable finance organizations that are eager to discuss climate finance topics and issues, in which we will eventually bring together a series of recommendations to Nordic governments on how they could best act or advise or understand or create policies to facilitate these topics. Some of you might have joined our previous webinar, which was about 2 weeks ago, in which we spoke, for example, with the Commission and different other Nordic investors on the European taxonomy. Again, today we'll be speaking about portfolio alignment, so climate-related investment strategy. Just a few practical notes before we really kick off. You will be muted automatically as a listener to the event. If you have any questions, we are very happy to take them into account. We have a team of people in the background who will be monitoring the questions that you will share. So please do that in the question box in the GoToWebinar panel on your right. At the end of the webinar, we'll be having a Q&A, and during that Q&A, we'll be discussing together with the audience either your questions or the recommendations at the Nordic government level. As you know, some of us might be broadcasting from home, so please bear with us if you hear any sounds or children, or I know, for example, here today in the South Pole office in Amsterdam, there might be a fire alarm check, so please bear with us if there are any sounds hindering the webinar. It will be recorded, and we will do our best to stick within the time and wrap up everything before 11:30. This presentation will be shared with you. Also, the recording, you can click on the links in the presentation, for example, here to visit the landing page we have. A little bit about South Pole. So South Pole is a Swiss climate consultancy firm that was established in 2006. As you can see here, we have many different offices and locations spread around the globe. And you might have heard of us as the world's largest certified carbon emission reduction projects provider. But at the same time, South Pole does many different things as well, both in the corporate sector, financial sector, with climate consultancy. Just a few words on the sustainable finance arm at South Pole, in which we serve financial sector clients on climate opportunities and associated risks as well. We do that through a TCFD advisory arm. We focus on SDG impact analysis for financial products, and related to today's subject matter, we help also investors with Scope 3 carbon footprints and aligning portfolios or holdings with the Paris alignment, so data insights. You'll see an example of that later today in the presentation, and steps towards climate neutrality. Mikko, would you mind opening your camera as well, introduce yourself, and say a little bit about Gaia?
Thank you, Ingmar, and welcome and good morning, good day, good afternoon, evening, wherever you are. It's a pleasure to host this series together with South Pole. A couple words about Gaia and why we are so happy to be involved here. We've been working for the past around 30 years on sustainable development in different parts of the world, and in particular on sustainable business development, and the past 10 years actively also on the finance sector. And we try to do that together with our partners, governments, NGOs, finance sector stakeholders, and companies, businesses. some 3-4 years ago, we did work for the Nordic governments, where we looked at how the Nordic governments could more proactively be part of mobilizing the finance required for climate solutions and more broadly greening the finance sector. And we came up together with the Stockholm Environment Institute, the New Climate Institute, with a broad set of recommendations. And one of the recommendations was specifically to better and more actively share lessons learned, look at good practices, because we know that many parts of the world are looking for Nordic leadership also issues. So for that reason, we are extremely happy to be part again of this platform, and now for the 3rd year host it together with South Pole. Next slide, please, Ingmar. And it's really a privilege to have you as speakers. We have a great set of speakers today, and we'll be listening very carefully to you and hopefully learn a lot, so we can jointly then address the major challenges that we have ahead of us. Back to you, Ingmar, and looking forward to a great session.
Thanks, Mikko. Just a few words on what the platform actually is. So the Nordic Platform, as I said, is a group of Nordic organizations, particularly investors, that come together to openly discuss challenges and opportunities on integrating climate in investment decision-making process or in policy. So the platform is inspired by the Nordic vision of 2030, which states that the Nordic region aims to become the most sustainable integrated region in the world by 2030. It is also inspired by the Helsinki Principles, which are a series of principles for finance ministers to establish low carbon and climate resilient policies. And finally, the work that we do is a work stream supported by the Nordic Council of Ministers, particularly a working group in there, which is NKL, the Nordic Working Group of Climate and Air. Few words on the members. As you can see, all the Nordic countries are involved. We have a wide range of members in the platform, ranging also from the PRI to the European Commission to a range of sustainable finance related investors. And our speakers of today, the most important thing, could everybody please quickly open his or her camera? Then I will introduce you very briefly. So starting with Jean-Christophe Nices-Chateau, maybe you could wave to the audience for a moment, policy officer at the European Commission. Me and Vesa, we spoke before, and we decided that we would speak in first names. Vesa has the most beautiful surname, but pretty challenging to pronounce. So Vesa, a responsible investment analyst at Varma. Then there is Magnus Billing, the CEO of Alecta. We have Corina Hornwall, ESG analyst at Swedfund. Johanna Reynal, Director of ESG and Impact at Swedfund as well. Then we go to colleagues at Finnfund, Mina Kusisto, economist at Finnfund, who is sitting together there with Kenneth Söderling, impact analyst at Finnfund. So thanks everybody, and let's move on with the first presentation of today, which is by Jean-Christophe on the climate benchmarks and ESG disclosures. Please, Jean-Christophe, the floor is yours.
Well, good morning, everyone. It is my pleasure to be here with you today. I would also like to thank South Pole for the kind invitation to present the work conducted by the European Commission on EU climate benchmarks. So in my presentation, I will take you through the objectives of the Commission and the content of the legislation as we adopted, with a specific emphasis on the minimum standards for the construction of EU climate benchmarks, but also key elements on ESG disclosure requirements. Next slide, please. So the climate benchmarks regulation creates two types of EU climate benchmarks, voluntary labels, an EU climate transition benchmark and an EU Paris-aligned benchmark. It also introduces ESG disclosure requirements for all benchmarks, with the exception of interest rate and currency benchmark. Next slide, please. So one key element to bear in mind for the rest of the presentation is that the EU climate benchmarks are underpinned by a methodology which is linked to the commitments laid down in the Paris Agreement, but they serve and they have different levels of ambitions. Next slide, please. So the main objective here is to equip investors who want to pursue climate-conscious investment strategies with appropriate tools. It also aims to improve the comparability of climate benchmarks that are offered in the market, discourage greenwashing, and increase transparency on investors' impact, specifically with regard to climate change and the energy transition. So in July 2020, the Commission adopted secondary legislation laying down the key minimum standards to the construction of both EU climate benchmarks. Those follow and are based on the work conducted by the Technical Expert Group on Sustainable Finance, which delivered its report in September 2019, followed by a complementary handbook in December of that year. Next slide, please. So on this slide, you can find the main key standards for those benchmarks, and I will go into more details now. So I will also refer to EU climate transition benchmarks as EU CTB, to be shorter, and EU Paris line benchmarks as EU PAB. That will be easier. So since both EU CTBs and EU PABs pursue similar objectives, but they vary in their level of ambition, most of the technical criteria are common to both benchmarks, but they vary in the thresholds put forward. So first and foremost, to create the link with the Paris Agreement, the delegated acts use the 1.5 degree scenario from the Intergovernmental Panel on Climate Change, IPCC, with no or limited overshoot, which is the most ambitious scenario where carbon emissions reach net zero around 2050. In order to be in line with such scenario, investments must be reallocated from fossil fuel dependent activities to green activities. They must demonstrate a better climate impact than the current listed economy, which is considered not in line with an ambitious scenario, and their climate impact must improve year after year. So the first minimum standard that you can see here is maybe not the most obvious, but can be seen as a safeguard. It is the allocation constraint. It implies that any climate benchmark cannot have less exposure to sectors highly exposed to climate change than the underlying investment universe. In other words, if you split any investment universe in two parts, the first one being highly relevant to climate change in a negative or positive way, and the second one being marginally exposed to climate change issues, any climate benchmark cannot be overinvested in what we would call neutral sectors, healthcare, IT, etc. The second minimum standard is a dynamic constraint. It implies that any EU climate benchmark has to demonstrate its ability to decarbonize itself from the base year and 1 year to the other. Here, the rule also based on the IPCC scenario is 7% per year. The third and last minimum standard is also related to carbon emissions. EU climate benchmarks have to show a significant decrease in exposure to carbon-intensive assets compared to the parent benchmark or the underlying investment universe. Since the EU Paris-aligned benchmark is meant to be more ambitious than the EU CTB, the minimum decarbonization level is set as 50% compared to 30% for the climate transition benchmark. Next slide, please. The legislation, and it's also very important to bear in mind, considers emissions assessed on a life cycle basis, and not only direct emissions from companies. In other words, scope 1, 2, and 3 emissions have to be taken into account in the analysis. This is key and very important to us, since the decarbonization, which is only based on scope 1 and 2 emissions, could lead to counterintuitive results. As we recognize, however, that the quality, availability of scope 3 assessments is not yet at the same level as for scope 1 and 2, we also integrated a phase-in period over 4 years, starting with the most relevant sectors, which are mining and energy sector. Next slide, please. For the EU Paris-aligned benchmarks, the legislation also contains exclusions for companies that are involved in controversial weapons, tobacco activities that are found in violation of societal norms, or the so-called 6 environmental objectives from the EU taxonomy. It also includes activity exclusions based on thresholds of revenues coming from fossil fuel activities that you can see there on the left side of the presentation. It is therefore the combination of all these requirements applied together that is meant to create a solid basis for the EU climate benchmarks. The rules here leave sufficient margin and flexibility for the market to innovate, but also to differentiate. Finally, the legislation also contains requirements for further transparency of estimation, disclosure of the decarbonization trajectory, and accuracy of data sources. Next slide, please. So for the future, the Commission will have to review the minimum standards of both climate benchmarks by the end of 2022 in order to ensure a coherence with the EU taxonomy. Then we will also have to submit a report to the European Parliament and the Council at the same date on the impact of this regulation and on the feasibility of the creation of an EU ESG benchmark label. I will conclude by referring to the other front of the legislation adopted by the Commission, which we actually also consider as the real game changer here, and the introduction of a requirement for all benchmark administrators to disclose a set of ESG information. So next slide, please. So this slide has it all. So there are two delegated acts that lay down ESG disclosure requirements to be made as part of the methodology and in the benchmark statement. So the legislation lists for the first time a number of ESG factors or indicators to be disclosed by benchmark administrators. Those are set by asset class, equity, fixed income, sovereign, commodity, others, in order to reflect best the specifics and relevance of the indicators for each class. They include, for example, greenhouse gas intensity of the benchmark, ratio of female to male board members, average corruption score, etc. In the methodology, more specifically, benchmark administrators should mention whether and which ESG factors they have used and for what purpose, so weighting, selection, exclusions of assets. While in the benchmark statement, where the benchmark administrators mention that they pursue ESG objectives, they should disclose information on all the ESG factors that are applicable to the relevant asset class. In addition, for significant equity and bond benchmarks, as well as for EU CTBs and EU PABs, benchmark administrators shall further disclose details on whether or not, and to what extent, a degree of overall alignment with the target of reducing carbon emissions or the attainment of the objectives of the Paris Agreement is ensured. Finally, the delegated acts contain very clear and detailed templates to be used by benchmark administrators, and we consider that such standardization should ensure a better transparency and comparability between all benchmarks. That's it for me. I would like to thank you very much again for your attention, and happy to take any question later. Thank you.
Thank you very much, Jean-Christophe, and that was a great presentation to set the scene, what is going on the European level to facilitate the decarbonization of investment portfolios. You mentioned the climate benchmarks, Paris-aligned benchmarks, particularly interesting for passive investors, and very interesting to hear as well that there are ongoing plans to create a more wider ESG benchmark, which will be followed by a new report that will be published. Please, Jean-Christophe, close your camera, and Vesa, may I invite you to open your camera and move forward with your presentation on Varma's climate targets. Thank you.
Thank you, Ingemar. Great to be here. My name is Vesa Syrjäläinen, and I work as a responsible investment analyst at Varma Mutual Pension Insurance Company. We are in short, we are a pension fund located in Helsinki, Finland, with 46 billion euro in assets under management. Next slide. So we launched our first climate policy in 2016, where the top level goal was to align our investment operations with the Paris Agreement. We since then updated our climate policy in 2019 due to all the information that changed during the period. Now the top level goal for us is to be carbon neutral by 2035. It is an ambitious target, but we've set numerous different sub goals, concrete targets for ourselves in order to stay in track with the long-term goal. We plan to achieve this by investing in companies that create solutions for reducing emissions and take the progression of climate change into account, and investing in companies that benefit from climate change mitigation by creating products and services to replace fossil fuels. So in essence, we're trying to find the companies that provide solutions for the transition to a low carbon economy. Next slide. So like I said, we set numerous sub-targets. One of them is to increase our allocation or increase the climate allocation to 20% by 2025. This is something that we have been defining this year. It's a cross-asset allocation that includes everything from real estate to hedge funds to listed equity to listed fixed income. We plan to invest in companies that benefit from actions to mitigate climate change, whose operations are low emission in industries that are carbon intensive, companies who have a clear strategic science-based target of reducing those greenhouse gas emissions, or whose operations offer carbon sinks. So we try to both find companies that produce the solutions, but if the companies are operating in a industry that aren't providing them, the companies themselves can align them with the climate targets. Next slide. Here are some of the goals that we set in our climate policy. The two cross-asset goals you can see here are the carbon neutral investment portfolio and the climate allocation. But then we have set specific or asset class specific goals. For example, in listed equities, we are aiming to reduce our carbon intensity by 50% by 2027. This includes both listed equities and corporate bonds. We also are phasing out thermal coal investments by 2025. We are excluding oil exploration by 2030. We also have an engagement process in place for thermal coal power generation that where the goal is to get the companies to shut down the plants and not sell them forward. Index funds, we are increasing the allocation to low carbon funds, and in private equity, we are increasing the amount of renewables in the electricity generation investments by 2045 to account for 50%. And in real estate, we will be shifting to fossil-free electricity and heating in 2025 and 2030 respectively. So as you can see, we try to set these concrete goals that will guide our investment operations to the right direction in order to be able to achieve the 2035 carbon neutral investment portfolio. Next slide, please. And just briefly here, you can see that there are a lot of goals that we need to keep track of. Some here weren't mentioned in the slide before, such as climate policy updates on 2023 and 2026. This is because we have committed on updating our climate policy every 3 years, because we acknowledge that the information changes pretty quickly. The methodologies change, the data is coming better all the time. So we need to be aware that we can't just lock in these targets, but we need to be able to change them and update them if there should be any requirements. Next slide, thanks. I'll just briefly highlight 2 mega trends currently going on. The passive market has grown significantly and is increasing all the time. At the same time, the ESG ETF flows have been positive, significantly positive during the past few years. Like in the previous presentation, I believe that the sustainable benchmark regulation is something that will be immensely powerful in allocating funds, especially with institutional investors, to the right place. I think it's pretty clever and easy solutions if the index providers themselves can provide the solutions, and the investors can just pretty easily select a product that is already in line with the Paris Agreement. Next slide. Then coming back to our operations, a few years ago, we did a preliminary analysis of our investments, and because we wanted to know what are the most exposed investments in our portfolio when it comes to climate change. And it was pretty clear that there are 7 industries that are the most exposed. We call or coin them transition industries because we don't necessarily think that they are bad industries, but we think that within these industries are both the winners and the losers that can either be the strongest, have the strongest willingness to change and adapt to the change brought by climate change, or they don't. And we need to be aware what companies we have, what are we invested in. Currently, we report this information annually, and we also report the information, and we go through the investments within the industries internally on a quarterly basis with our allocation team. Next slide, please. Then a couple of months ago, we updated our sustainable equity portfolio. The original sustainable equity portfolio was launched in 2016 when our new climate policy was also launched, but then we updated the climate policy, so it made sense to also update this portfolio. Now the idea is that the portfolio promotes the UN Sustainable Development Goals while aligning itself with Varma's own climate targets and our ESG principles. The equity portfolio consists of a passive core and actively managed part. This is mainly due to that now we can make a significant investment in our satellite portfolio while keeping the tracking error at bay. The passive part aims to track global ESG benchmark, and we have excluded a lot of industries. Some of them are already excluded from the benchmark, but some of them are made by us. One of them is the integrated carbon intensity curve, which aims to mimic the mechanics of the sustainable benchmarks. The idea is that on every rebalancing, we are decreasing or lowering the carbon intensity threshold that the portfolio has, which makes sure that the core part will be in line with our own climate targets that I talked about before. This is purely done internally, which allows full control over the investments, and the methodology makes the process more straightforward if there should be any changes. Next slide, thanks. And then we've not just made internal products, but we have also done external investments. We did or designed a Bespoke Etf. This is due to that we couldn't find an ETF product from the market that was large enough and had all the pieces in place that we wanted. The issue is that some of the largest exclude things like nuclear power or alcohol, where we don't have a policy on. So we wanted that the ETF highlights everything that we have in place. Luckily, it's been a pretty good investment. It's mainly due to the energy sector weights that is significantly lower in this ETF, while we have a higher weight in tech. But still, it's something that we're pretty happy about. Yeah, I think that's it. Thanks.
Thanks so much, Faisal, for your insights, and thanks also for focusing particularly on not only risks but on solutions, companies that have the capacity to change business models. You mentioned also companies that have a positive impact on carbon sinks, for example, that it's part of the engagement process at Varma. You mentioned also to be positive on having clarity from the European perspective on when is a benchmark in line with Paris and when is it not, so that portfolio managers can easily make decisions there, or more easily. And you gave an update on the sustainable equity portfolio as well. I want to introduce a quick break to the audience. As when you registered, we asked you a question, and as I mentioned during the beginning of the webinar as well, our main goal of today is to think together of recommendations that we can present to Nordic governments, if they could help increase the thinking or promotion of, in this case, the EU benchmarks. So what we see here is that 18 of you replied, and that most of you clearly mentioned, yes, there is a role for Nordic governments to facilitate the climate or Paris benchmarks for investors. Now that's a good sign. However, there's one more question, obviously, that we're very interested in here, and that is, well, if there is a role, what then specifically could Nordic governments do to help facilitate as such? So I'd really like to ask you to take a moment to think of this question, and during the course of the next presentations, please keep it in mind, and please share with us a few of your suggestions. These suggestions will help us eventually also when we will report to the Nordic Council of Ministers on what the sector, clients, listeners think of what a role could be. So again, please take a moment to think of the question, is there a role for Nordic governments to facilitate the EU benchmarks for investors, as we just discussed? So having said that, thanks, Vesa. And Magnus, may I ask you to open your camera and present your results on Alecta stress test. Thank you, Magnus.
Thank you, Ingmar, and thank you for giving me the opportunity to be part of this discussion today. And thank you for very interesting presentations so far. I hope I can meet the high standard that we've seen in the previous presentations. I thought I would talk a little bit about our experience from stress testing our portfolio based on a number of climate scenarios, and what reflections did we make from that, and what actions do we think is necessary to take in order to get into a better position. So if I may ask for the next slide, Ingmar. Thank you. Before I get into this, I just wanted to give you some points about what is Alecta. Alecta is a pension company focused on collective bargaining pensions. We have a customer base of about 2.6 million private customers and 35,000 companies in Sweden. We manage about 100 billion euros, and we have what I would consider a active management philosophy based on fundamental analysis with a very focused portfolio. So on the equity side, we only invest in about 100 companies, which means that we quite early on become a fairly large shareholder in the company. We have an ambition to be extremely long-term shareholder in these companies, and the reason being that we would like to ensure that to manage the matching risk on the liability side in the balance sheet, i.e. we have commitments that run for 30, 40, even 50 years down the road. That is perhaps the opportunity that we have when it comes to integrating ESG factors into our investment process. And part of doing that has been to take the view of we need to stress test our portfolio in line with our, or in accordance with the ambition we have on the portfolio generally, which is that it should be net zero emitting by 2050. So that's the overall goal. And we needed then, of course, to understand where are we today and what's the path going forward. stress testing in itself is based on a discounted cash flow analysis in all simplicity. What we did was to look at the emissions that the companies made, our share of that emission given our shareholding in the company, and put a carbon price on that emission and discounted that back from 2040. And the result was, not surprisingly, a lower market value compared to what the market was actually showing. I will come back to what sort of actions and reflections we make from that. But there are 3 takeaways that I would like to share with you from our stress testing that we now perform for 2 years. So Ingmar, if I may ask for the next slide. The first takeaway is the data quality. And we were quite surprised. We expected issues with the data quality, but we were quite surprised to see, for example, that when we source data from data providers in the market space and compare that to what the companies in some occasions in themselves reported, we could see that the company's own reported data in some cases was underestimated by 20 times. That's quite a large number. Then we also obviously, not surprised, but we identified in our own portfolio that in the reporting of both scope 1, 2, and 3, only 54% of our companies reported scope 3. The number increased to 81% when you just looked at scope 1 and 2, but clearly this raises a question for us: how can we encourage and incentivize the companies to provide better disclosure or more coverage? The third point, which has a very strong implication on the result, is the spread or the carbon price. We did a thorough work, we consider it to be a thorough work, to try to identify the carbon price to use. And we all know that the market price in Europe is somewhere around $40 per ton. And when we look at the research done by EIA and the IPC, we could see that if we're going to have a scenario of 1.5 degrees, we needed to get up to, according to research, or according to the science, up to $870 per ton. Clearly, the spread between 40 and 870 is enormous when you discount that from back to today from 2040. The impairment on our portfolio, on our equity portfolio, would then range from around 20% all the way up to 50%. Having said that, I should mention that the assumption is that the management of these companies do not do anything until 2040. That's obviously not true, or most likely not true. I think we as a shareholder would feel that the company has the wrong management if they don't take actions on these issues for the next 20 years. But that was the only assumption we could make to fulfill the stress test. So these are the key takeaways. I think what can we do based on these outcomes? If I could have the next slide, Ingmar. The actions. One action, and that's what Ingmar also mentioned earlier on, one of the ideas of this conference and this webinar is to share best practices. And we wanted to share our conclusions, our methodology on this stress testing, because we think it's to some extent common good. It's something that all the market participants could benefit from, of sharing knowledge, know-how, and experiences to take us to the next step, which I think is absolutely necessary in order to be able, as an institutional investor, to assess your portfolio's climate impact and stress test that according to your climate goals. Now, based on the 3 takeaways that I mentioned earlier, I think from our point of view, there are a number of actions that we could take as an individual institutional investors and that we are trying to take already. One is, of course, pushing through active engagement our companies to increase the reporting, to get better coverage on scope 3, and also support them in having better quality on the scope 3 data. So I think the European Commission's initiatives on this side is very much welcome, and we strongly support that. The other action is related to the engagement possibilities that comes out from the stress testing from the point of view of discussing value creation with the companies. As I mentioned earlier, the market value after the stress test is basically per default lower than what the market price is showing, generally speaking. Now, the companies we can then go to the company and have a discussion and say, look, this is our outcome. We feel that some of the costs that you're running is not being properly internalized. How do you look upon this? Do you agree with our assumptions? If yes, how will you deal with this additional cost? Is it possible for you to pass it through to your customers? If not, what kind of actions do you intend to do when it comes to adjusting your business model in order to have a long-term sustainable business model that is aligned with the Paris Agreement and still capable of generating shareholder value? And that's a very powerful tool for us to bring to the discussion table with the companies, this stress test and these conclusions that we can draw. So happy to share this. As I said, we think this is to some extent common good, and I will end on that note by saying that we have intention to disclose the report to a fuller extent to the marketplace, and we're looking forward to have a discussion and sharing views on that. Obviously, very much in self-interest, because we think we need to improve in this area, and we have an opportunity to do that. But we think we could benefit from other market participants providing their insights into this topic. So thank you very much for giving me the opportunity, and thank you for listening to me.
Thank you, Magnus, for your presentation from Alecta's perspective, and thanks also for emphasizing the importance of collaboration and collective brainstorming on especially complicated topics such as climate change. You mentioned the long-term nature of your investment, managing a smaller and dedicated fund, being very close to your holdings that you have positions in. You mentioned the stress test, which consists of looking at emissions, looking at the share of investments, the allocations, and linking that with the carbon price. Interestingly, your proxy data limitations, something that we'll for sure encounter in later webinars in this platform as well. And just like Fesa, you also pointed to the relevance of engagement here. So thanks, Magnus. And to the audience, we have received already a few questions. Please don't be shy to share them with us. We will not mention your name. We will only use your question and address it to a particular speaker later on during the Q&A. So feel free to do so. Yes, moving forward, may I ask you, Corina and Johanna, to open your cameras, Magnus to close his, and to continue with the presentation by Swedfund on its climate-related investment strategy. Corina, Johanna, the floor is yours.
Thank you very much. So hello, everybody, and thanks for giving the opportunity being part of the discussion today. So my name is Johanna Renal. I'm heading the ESG and impact operations at Swedfund, and Corina, my colleague, is our true climate expert on this side. So I will start very shortly giving a bit broader perspective to the Swedfund's climate work, and then Corina will give us some insights to one project, very interesting project that we've done recently. Very shortly about Swedfund. So we are the Swedish state development finance institution investing in emerging markets, developing markets to create jobs and reduce poverty. We invest in renewable energy and climate sector, healthcare, and financial inclusion. We've been working already quite a while with a climate related issue. It's one of our core themes. But last year we had an opportunity to engage together with our owner around new emission goals. And as a part of that project, we also looked into the new climate targets for Swedfund. And the starting point for us, being fully government-owned company, was to align, of course, our investment portfolio with the Paris Agreement. And based on that ambition level, we landed in two more concrete climate goals or targets for us. The first goal is to have a climate neutral portfolio by 2045. That's the year that also the Sweden as a country shall have a reach climate neutrality. And just to, I think there's lots of different definitions on the climate neutrality at the moment. So we spent quite a lot of time from our perspective to really dig deeper. What does it mean for us? And yeah, obviously we landed into the discussion that, or to the conclusion that all the economic activities emit greenhouse gases, and we need to, in line with the second target, reduce the CO2 emissions from our operations and from our portfolio, and then actually have a real economy change. So do the carbon catching to balance that one. But I think if I can get the next slide, I can put a little bit more light into the discussion that we had when we discussed about these new climate targets together with our owner. And we looked into what does Paris Agreement mean for us as a development finance institution. And we kind of divided Paris Agreement for us in 3 different levels. So on the other hand, we recognize that we need to have the portfolio level view, where we need to see that the total portfolio is in balance. We have a net zero emissions by 2045, and that leads to certain kind of a more concrete activities. Then we need to look into the sectors that we're investing in. We've been investing only in renewable energy production since 2015. So we've done basically the larger transformation in our portfolio already earlier. But more than 30% of our portfolio goes into the energy and climate sector nowadays. But of course, the climate neutrality target on a portfolio level has a strategic consequences for the energy and climate sector, and we need to make sure that in the future we will look more into the carbon sequestration part. And then finally, of course, it's not enough that we look at the portfolio and level and we do the climate investments. We need to take climate activities in all of the investments that we do and make sure that all of our portfolio companies assess their climate impact and have a proper assessment of the climate risks. How does the climate impact on our portfolio companies? Why is this so crucial for us? If I get the next slide. So for us as an impact investor, we use lots of the concept of theories of change. And regarding the climate, if we look at the wider impact and the SGDs there in the right side of this picture, I think it's very important for us to remember that we can get very technical when we discuss about climate, but climate is really an urgent issue. We read in the newspaper this today in Sweden that September was the warmest month ever since the measuring have been started. And the countries where we invest in sub-Saharan Africa are already experiencing huge consequences due to the climate change and certain physical risks. So it is the decisions that we make within our climate strategies and operations every day really have a real life consequences for the people, planet and the businesses. And our input in the climate theories of change, that was of course the climate targets, or has been the climate targets we set together with our owner. And recently we've been looking very carefully on the activity level. So what are the activities we need to take in order to better understand the different pathways to the zero emissions? What kind of a climate lens we need to have in all of our investments to be able to really understand the climate risks for our projects and also the impacts that our projects cause. That's something that we need to improve continuously. And then, of course, we need to develop more and more ambitious climate targets and programs to our portfolio companies. And Corinna, if I give the floor to you to tell a bit more about this recent project that will have consequences on our activities and requirements going forward.
Great, and thank you, Johanna, so much for that background. So essentially, with the background of these owner goals and our commitment to align with the Paris Agreement, we wanted to understand what this means for us and where our portfolio is currently. So we can go to the next slide, please. So as a first step, we therefore wanted to undertake an assessment of the degree to which we are in fact aligned with the Paris Agreement, and South Pole has supported us in this analysis. The assessment essentially evaluates the extent to which we as investors and our portfolio supports the aim of the Paris Agreement, which, as you know, is to keep the average global temperature increase to well below 2 degrees. Without going into too much detail on the methodology, but the analysis is based on the draft science-based targets initiatives methodology for financial institutions. The final version of this was published last week. And essentially, under this approach, each single investment in our portfolio was assessed against the beyond 2 degrees scenario by the IEA. And as you can see in the graph, this scenario shows how the whole economy, and therefore also each individual sector, has to reduce emissions between now and the end of the century to stay within the 2 degree target. And for our assessment here, a carbon intensity approach was used. And this means that the carbon intensity, so the greenhouse gas emissions per invested Swedish crown for each investment, was compared against a target carbon intensity for that sector, both in 2030 and 2045. And the assessment was undertaken based on our current portfolio, so comparing this against these future carbon intensity targets. So the alignment of our portfolio was checked both for our direct investments, where we as Swedfund directly make equity investments or give loans to our investees, and also for our indirect investments, which includes all the underlying companies of our fund investments and all the downstream borrowers of the banks that we lend to. So if we can just go to the next slide. You can see here from the results that in our direct investments, already 90% of these investments are aligned with the Paris Agreement, both in 2030 and in 2045. And if you look at the indirect investments, you can see an alignment of 88%. So 88% of our indirect investees are aligned in 2030. And in 2045, this number reduces slightly because this is, as you saw in the previous slide, the carbon intensity reductions become more stringent over time. So if we can just jump to the next slide, this just shows the results broken down by our 3 key sectors. So in our healthcare sector, you can see here that the investments in this sector are already aligned with the Paris Agreement based on their emissions intensity. In the climate and energy sector, as Johanna said, since 2015, we only invest in renewable energy production, but we do still have some older investments in gas which are still in the portfolio, so that's driving the results here, but they will be exited in a few years. So then we will only have renewable energy in the portfolio, which would substantially improve this alignment score. And what this just shows for the financial institutions sector is that the banks that we lend to, they in turn lend to almost all the sectors of the economies in the countries in which they operate. So that here includes more carbon intensive sectors that have steeper emission reduction curves under the scenario. I should just mention here as a brief caveat as well that the assessment was primarily conducted using estimations of the greenhouse gas emissions of our investees with sector and geography specific emissions factors. And this is because it is very difficult for us, given the types of investments that we make, to obtain primary emissions data from our investees. I'm slightly conscious we're a bit over time, but if we just go to the next slide very quickly, just to sum up, this assessment was very useful for us and has shown that our investment portfolio already has a relatively high alignment with the Paris Agreement. And this makes sense given our sector focus and the sectors that we invest in. Our aim is to update this analysis regularly, and it can therefore serve as a tool to help us track progress against our owner goals and against the aim of aligning with the Paris Agreement. The assessment can also help us to identify and decide on new requirements for our investees, for example, climate targets, requiring them to measure their emissions directly, or implementing climate strategies. And it's also useful for us to prioritize activities within our portfolio for active ownership, for example, supporting our financial institutions and banks in their low carbon transitions and shift towards greener lending. So just to sum up, this has been a very useful exercise for us to understand the alignment of our portfolio and of each individual investment, and to identify focus areas to ensure that we meet the climate goals and targets that we set out at the beginning. So thank you very much for listening, and I believe as well there is time for a Q&A towards the end, but feel free to reach out to us directly also for more information on this. Thank you.
Super, thanks. Thanks, Rina, and also Johanna on the presentation from Swedfund. Great to have multiple impact investors on board, as we'll be speaking to Finnfund in a moment. You mentioned net zero targets 2045, a detailed look at the Paris Agreement, portfolios, sector and project level, distinguishing. Great that you focus on the practical side of it, a case study. You mentioned some more details on what type of scenario you use, IEA, and that it was inevitable to do certain estimations due to the lack of primary data and using emission factors. Thank you. And in the light of time, may I ask you to close your camera if you haven't done so already, Johanna and Corina, and Minna and Kenneth, to start with your presentation by Finnfund. Thank you.
Thank you. So we are here at the Finnfund office, and Finnfund is a Finnish development finance institution, and we finance projects in developing countries. And today we are here to talk about forestry investments, especially in Africa. And slide, please. Thank you. So how this is related to Paris Agreement? The thing is, in the Paris Agreement, the emission reductions are not enough. All of the IPCC 1.5 pathways states that the carbon removals are key to achieve the 1.5 degree pathway. And one key thing in these carbon removals is, of course, the forestry investments. And as we go further, and we have seen that the emission reductions are not near the scale needed, these carbon removals are becoming every year increasingly important. So as we need all of the emission reductions, we also need carbon removals. Next slide, please. And here is the global GHG abatement cost curve. This is really an interesting curve. Just to sum it up shortly, on the left-hand side, you will see the most cheapest solutions to reduce GHG emissions, and on the right-hand side, you will see the most costly solutions. The most cheapest one are options just like LED lighting, and these low-cost solutions are almost already taken, and now we are somewhere in the middle on the pathway to carbon neutrality. And as we can see here on the middle, the afforestation is really a cost-efficient way to reduce carbon from the atmosphere. Next slide, please. So the sustainable forestry is in core of our climate investments and our investment strategy. We also have key sectors such as renewable energy, financial institutions, and sustainable agriculture. Nowadays, we estimate climate impacts of our total portfolio and every investment decisions before we make one. Currently, forestry accounts 1/5 of our portfolio. We have invested since almost about 20 years to forestry in Africa, and we have made 10 direct investments, and we have also 5 forestry funds. Mainly these are afforestation projects where, for example, we convert degraded land or pasture land to forest plantations. Thank you, and now Minna will tell you more of why invest in forestry.
Thank you. Actually, we can already go to the next slide. So I will explain briefly why we see value in investing in forests, but also I will underline some challenges that still remain. So first of all, of course, our forestry projects, they entail massive climate benefits. They are a tool to fight against climate change and deforestation, but they also bring along other benefits and positive development impacts. Our forestry companies, they're often major job providers in the region they operate, especially in rural areas, and they also provide jobs for less educated people. Often these companies, they also, for example, build roads, or they have CSR programs in place that improve the local infrastructure. So in many ways, the forestry businesses are vital drivers for green growth. They also create domestic tax revenue, and through them we can help, through those businesses we can actually help developing countries to integrate better in the global value chains as well. So we see definitely business opportunities in the sector. There's huge landmass potential, especially in Africa, and as we know, the production is still in very early stages, and same time we see that the local and global demand for sustainable timber will continue to increase. It's actually been estimated that the need for sustainable roundwood will double from the level of 2010 when we go to 2030. So there's a massive increase in demand. But of course, we also have many challenges in the sector. It's not an easy sector to operate, especially in Africa. There are risks related to responsibility and sustainability, political risks, for example, land acquisition processes can be cumbersome, and the lack of land rights is also an obstacle in many places, or at least a challenge. What is also very particular for forestry projects is that you often need to make large initial investments, and the payback profile is long dated and backloaded, and that of course also affects the investor's appetite. But we can go to the next slide. So what to do with this or about these bottlenecks, and how to mobilize more capital and more private capital into the industry, and especially in the sustainable forestry sector in Africa. So I have identified here 3 key factors. First of all, we need a change in investor attitudes. So how we see it is that investors, the perceived risks, for example, especially related to or associated with Africa, are often higher than the actual risks. And especially many Nordic investors, they're used to forestry investments being low risk and low return. So when they look at Africa, they see that the risks are high, and the returns do not necessarily match their expectations. Another factor that we need to highlight here is that we need to demonstrate the commercial potential of the African sustainable forestry sector. So that requires that we do not only invest in new plantations, but we also have to invest into processing facilities of the existing plantations, so that we can actually demonstrate that there's a market value for the wood. And for those investments, we often need patient capital, but we also need different kinds of risk-sharing mechanisms, and of course improved sustainability and responsibility practices as well. And finally, of course, we also need continuous policy dialogue and policy support in order to improve the policy environment and to make it more enabling. So, for example, when it comes to land use, I mentioned the land acquisition processes and land rights, or regulations regarding, for example, illegally harvested wood, or policies regarding exports. So maybe to be mindful of time, I will try and stop here. But to summarize our key messages, basically, is that what Kenneth mentioned in the beginning is that we need carbon sinks to achieve the Paris Agreement goals, and forests are a cost-efficient way to do that. And we definitely see a lot of value in the forestry sector and also in Africa. But of course, there are still several challenges as well. But to overcome those challenges, we need a change in attitudes, and we need better risk-sharing mechanisms and patient capital, but we also need the policy level support. So thank you, and back to you, Ingmar.
Thank you, Mina, and thank you also, Kenneth. Great to learn and see Finnfund's perspective, forestry, carbon removals, afforestation, a growing demand for sustainable wood. Engaging story. You touched upon the risk profile as well, but also emphasized the clear commercial value in forestry-related investments, together with a positive climate impact. Looking at the time, we have about 22 minutes left in today's webinar, and we have received some questions, so that's great. That means that we have time to discuss 2 of them, I would say. So let's do 2 things. Mikko, may I ask you to open your camera and select 2 of the questions that came in so far, and we can address them. And then after the questions, we will discuss together with the panel the role of the Nordic government. Mikko.
Thank you, Ingmar, and thanks to all the presenters. Maybe we could start with one question. I think this is maybe Jean-Christophe, you could address this one. It's with regards to the key minimum standards. So would you be ready a little bit more to elaborate about the 7% greenhouse gas reduction, and how is it equally applicable to sectors, and is it as a whole or individually? Could you a little bit elaborate on that?
Yeah, definitely. Many thanks for the question. So the 7% decarbonization year over year is to be computed at an aggregate level for the benchmark, meaning that it is not, and I think important to mention that it is not at constituent level, so for all companies that form part of the benchmark, but overall benchmark administrators have to ensure that there is this 7% decarbonization computed using the 1.5 degree IPCC scenario, and it needs to be calculated geometrically, as also recommended by the technical expert group on sustainable finance. So yeah, it is aggregated at the benchmark level and not for each constituent, and yeah, but it's not sector again specific.
Thank you, Jean-Christophe. I think we have also a question, maybe Magnus, if you would accept to address this one. It's not an easy one either, but it's specifically related then to scope 3 emissions. It's something that is not directly in our hands, but what kind of pathways, what kind of ideas have you been developing, or do you see as potential ways to address that those scope 3 emissions in your investments? Would you like to elaborate, Magnus, on that one? And feel free to put on your camera if you want to address that one. And while waiting for hopefully Magnus to come on board, just to let you know, we have also received comments and also suggestions that definitely there is a role for the Nordic governments, and the governments, like in a previous webinar, do have already important tools in their hands. They do have their own portfolios, and they do have ownership of institutions, and they do have regulatory tools in their hands, so they could drive the discussion and dialogue and push it to stakeholders dealing with governments. So we do have those kinds of support, and we will take those messages to the Nordic governments together with Ingmar from the project. While waiting for Magnus hopefully to come back, maybe one question then to Minna. This is coming from the floor and also from myself. What kind of instruments, practical ways do you see that are required to attract that private finance? You highlighted the opportunities and many of the challenges and the need to improve awareness, capacity, and have. But do you have something more that you could say about maybe forestry investments? Do we need different kinds of instruments? Do we need some new innovation? Please take the floor.
Thank you, Mikko. Yeah, maybe I will mention one that is very topical here, since we also have the EU Commission here on the line. So, for example, the EU European Fund for Sustainable Development, that is giving guarantees to financial institutions so that they can better invest in riskier projects and in riskier investment programs. That's one very good practical new tool that will also enable DFIs like Finnfund to accept more risk in investments. So guarantees is one very good tool, but we also have different kinds of blended finance instruments available nowadays. So we have like concessional loans or patient equity investments. But I would say that at the moment, for example, we are very much viewing the opportunities that the European Fund for Sustainable Development is providing to DFIs.
Thank you, Minna. And Ingmar, please come in if there are other questions also coming directly to you. And there is one question that is parallel to the issues also highlighted by all other speakers, and also Magnus highlighted the data constraints. So there is one question also then going to Corinna and Kenneth and Minna also, and Johanna, if you still are online. How do you see how do you get the data with regards to greenhouse gas emissions from your investments in emerging and developing markets? How reliable is it? Is it self-reporting? What's the quality of that data? How do you respond to those kinds of challenges?
Thank you. If I may start, we use a lot of modeling. It's not highly accurate, but it's highly efficient. And our approach is that we look at our high emitters, and then we take a closer look on those. And that way we have reduced the share of our carbon footprint of the modeling to lower stage. So of our current emissions, we have a direct emission data from approximately maybe 60 to 70% of the total emissions, and then last 30-40% we have to rely on modeling tools. But yeah, we ask from the companies the data, and that's
yeah. Oh, sorry. No, I was just going to add that our approach there is very similar. We do request this data annually from our investees. We have found, however, that there are very few companies that do report their scope 1 to 3 emissions to us directly. And of course, then there is the issue of how it's been measured and the reliability of that. So currently, we also rely largely on a model which estimates the emissions based on kind of economic data and emissions factors for that geography and sector. But that's definitely one of our kind of prioritized actions as well going forward, as I mentioned as well in our presentation, to increase the share of primary data that we obtain from our investees. But it is a bit challenging. So that's why we use the modeling as well.
Johanna, do you have here anything you would like to add?
Well, I can just add that definitely I think improving the collection of the primary data, that's extremely important. And I think also in addition to that, I would really much looking forward and welcoming an alignment, even better methodologies, both when it comes to the modeling, but also what is the key data that is required and how to actually calculate the CO2 emissions. There is more and more harmonization on that area, but I think it's still needed more and more. We put quite a lot of time and effort into looking at the data, and our climate data goes basically through the similar revision by our auditors than the financial data. So we do a full audit both on the financial results from the portfolio companies, but also the ESG and impact.
Well, I would like to turn also now the question maybe to all of you who want to take the floor. One question is the level of capacity and awareness. So the taxonomy and the benchmark development is extremely important from the sake of having common understanding, common language, and standardization. Would you accept a little bit, maybe Vesa, would you like to come in and give your perspective from how you see what is in the Nordic countries, or if you wish in Finland overall, the level of understanding within the financial institutions, and we could try then to compare it maybe with what Kenneth and Minna and Corinna and Johanna, because you are also investing in financial institutions in emerging markets. So how much more do you need to work in those countries on this awareness and capacity issues, and how much faster should we actually be moving in countries like Finland and the Nordic countries and the EU? So because we do have common but shared and responsibilities that that the Nordics should be somehow leaders. Vesa, would you like to first give your perspective? How do you see the level of awareness and understanding now of the EU work, for instance, in the Nordic countries?
Yeah, sure. So I think the biggest thing that I've seen for the Nordic countries and especially Finland is that the interest about these things is really high compared to others. The willingness to even from the higher ups in our organization, for example, the interest on EU regulation is really high, and I think that is the biggest contribution that will change us forward when you have coming these kind of signals from the higher ups. It's definitely something that will make us quick to adapt to all these changes. I think there is great awareness, at least in Finland, especially within the pension fund sector, the asset owner sector. The biggest issue for us, I think, is that there isn't in our internal operations, there isn't a specialist when it comes to EU regulation. So we need to rely on outsider information, outside organizations like FA in Finland that will give us information about these things. So I think we would need more resources on trying to be up to date, and at the same time there should be more information coming from outside organization, even more, and even from the regulation side, which would make us think even better.
Thank you, Vesa, and Jean-Christophe, feel free to come in if you want to react, because probably you have a very good understanding of overall what's the situation in EU countries. So just put on your camera if you want to react. Otherwise, I will give the floor to Jean-Christophe.
Yeah, maybe a quick reaction to see that I'm very happy to see all this positive engagement, recognition of the work done by the European Commission, by the EU institutions in general, and to see the high interest by all the participants also today in this webinar. I think this is very encouraging. This is also something that I see when meeting with politicians from Nordic countries, this real interest and concrete interest on how sustainable finance can contribute to shaping a better world for the future. So yeah, again, very happy to see again today this strong interest in the developments, and yeah, this is the main message. Happy to hear this.
Thank you, Jean-Christophe, and maybe now if Swedfund and Finnfund, this time let's give first the floor to our Johanna and Corinna, if you would like to elaborate a little bit. How do you see the level of knowledge and capacity to work on this within the financial institutions in the emerging markets?
Yes, so I think putting the bridge to the European awareness, I think our governments and EU is doing a fantastic job pushing this agenda and keeping it active and alive, especially during these pandemic times when we have so many other burning challenges in the world. But I think the climate challenge that the world is facing is more urgent than ever, and that's another issue that we need to, or the discussion needs to stay alive. Then if we look at this situation from the developing countries point of view, I would actually like to quote Minna on what you said, that often the perceived risk in emerging markets is higher than the actual risk. And I would say that not only regarding to the climate, but the sustainability issues in general, I would say that there are fantastic financial institutions for example, in sub-Saharan Africa that are very much aware of all the sustainability issues. They have very good management systems in place. And I think some of them have been really forced due to the I would say, development finance capital, for example, coming these markets to put a great effort into developing their sustainability agendas. And but on the other hand, of course, these markets have many other regulation or issues to solve. So climate is among one of these, and I think one of the biggest challenges that for example our work showed when we look at the Paris alignment for the future. I think our banks and financial institutions, they need more concrete advice and support on how to increase the green lending products, how to build a green bonds, how to increase that kind of offering.
Thank you, Corinna. Would you like to add anything before we give the floor to colleagues from Finnfund?
No, I think Johanna summarized that perfectly. So nothing more from my side.
Thank you. Kenneth and Minna, would you like to add anything?
Well, I think that really covers it really well.
I can say a few words maybe about the Team Europe response. Johanna mentioned the importance of the pandemic response, and what the EU is currently aiming at is that they will try to build this comprehensive response that includes all the EU member states and also the DFIs. So I think that's one way to collaborate with the developing countries and emphasize the green recovery agenda with them, so that we have a harmonized and a comprehensive approach.
And I think that's really good. I think now I would like to give the floor back to Ingmar, so we start to conclude and also look what kind of answers and reactions we have further received on what could be the role of the Nordic governments. We already touched upon that, but Ingmar, back to you. Thank you.
Thanks, Mikko. And in light of time, we have 4 minutes ahead. But what I'd like to do is just ask two of you on the main question of today's webinar, and then we conclude. Let's choose somebody that's not working for an investor and is working for an investor. So if I may start with you, Jean-Christophe. So the central question really is, so in facilitating these EU benchmarks, is there a role towards governments, or particular also Nordic governments, to help facilitate the sector in facilitating that? I'd like to answer that and open your camera, please.
Yeah, maybe I think that there is a role. There is a role in spreading information about what it is, what the EU is trying to achieve, which is then beneficial to everyone. We really consider that the development of these EU climate benchmarks, and as you and I mentioned before, so reflection on the future, maybe broader ESG benchmark, and aligning with taxonomy also in 2 years, is something which is very important, where there can be an impact in the change. And so Nordic governments definitely also have a role to play in spreading the information about this. I think this is really key for pension funds, asset managers, benchmark administrators as well. We could see a strong take-up in the markets of these new instruments even before they actually were published or adopted. So the more I think we can see of take-up and thanks to also involvement of the government in spreading the information, the better. So this is indeed why I see a real role to play. And maybe just a quick word also saying that we are now reflecting on the future strategy for the renewed sustainable finance strategy for the next 5 years. And we are also exchanging with member states, with the industry. And I think this is the moment where we need to come up with new actions for the future, and also developing and strengthening the ones that we have been working on the past 5 years. Thank you.
Thank you, Jean-Christophe. So dissemination of information is a key role for governments, Nordic governments to play. I don't want to go over time today, so I will ask the financial industry representatives via email to continue the discussion with us. We have a great answer from you now, Jean-Christophe. Just some closing remarks. Thank you to all the speakers for your great presentations, staying within time. The practical side of integrating Paris considerations into investment processes. There are more webinars coming up in this Nordic platform. one on the 23rd of October, in which we will be speaking on the green bond standards, so debt opportunities, together with the Commission, NIB, and Finance Finland. We'll be speaking on climate risk and data on November 5th, upcoming, together with the PRI, Norfund, IFU, and the Nordic Development Fund, NDF. If you have any questions or you would like to engage with us, you can send us an email directly, reach out to the speakers, to us, and you can click on the Register Now button. You will receive the webinar slide deck, you will receive the presentation for more information and registration. We are very happy to have had you on board today. Thanks for your questions, and we hope to see you in the upcoming webinars as well. So have a good day wherever you are currently, and we'll hopefully see you soon again. Thank you.
Thank you.
Thank you. Bye.
Thank you.
Thank you.